Hi, everybody. This is Gary Dema, Sentiment Timing, and this is our technical video report for Thursday, October 16th, 2025. So today looked like it was going to be an absolute shellacking. We did get the S&P got hit pretty hard, especially from where it reversed. But I'll go over all that in a minute. I just want to show you kind of where I believe we are. So as I've been saying, when I say we're in a topping process here, I'm not saying that we're making a top like this. I'm saying we're making a top where we've kind of gone just parabolic up. And even though this is a little more sloppier, it is a more like this area here. I'm on the side that we're here. We're still going to head up, but we are going to probably have, a break. That's, we have the cycle top that I've been talking about. And this is really what I'm looking for, a test of the 200-day moving average, which is going to bring the S&P down to the 6150, which is pretty much a 10% correction. So I've not been saying anything about, we're heading into a bear market. I think a lot of people are going to believe we are, and that's going to shake out all the week longs. And we're probably going to see the VIX spike up to 40 or, in that range. And this is where we look to buy. And I mean, a good example of it, hang on one, is looking at the stocks that I've been warning for a while that, I've been layering out. And as I said, I layered out and I missed getting back into IWM, RGTIW. This one I was looking to get in at right around this, I think it was about $1 less. I still had a position, but then it went up and I wasn't really going to chase it. And as I said, the position that I had, I was layering out on these spikes. And yeah, I got obviously out a lot sooner than I should have. But I'm also on the side that we're going to come down and be able to buy these all the way down here. So we have the S&P that was down not even a percent, and you can see this is down 18%. So this is what I'm saying. This was all the people that were chasing on the way up. And when we start coming down, everybody's going to be panicking, thinking that this is the end of the world because they've been jumping in these stocks that have been, basically going parabolic, and they've made money, and now they're coming back and they're going to be losing money or even, and they're going to say, I'm out of this. And then from there, we buy it, and this thing will end up being a $300 stock. Well, this is the warrant, so I'm not sure what that will be. But the RGTI will actually be a $300 stock. And it's probably going to be a lot sooner than people think. I don't, it's probably going to be within the next year or two. I wouldn't be surprised. I'm not putting that label on it. But my point is, this is, everybody was piling in. And now we get these little blips and everybody's piling out of these. So that's why I'm saying I believe that we're just going to be having a 10% correction. It's going to last longer than a week. And it will probably take us into sometime at the end of November in that time period. And then we'll start the rally again, and everyone that's jumping out, because the ones that got in here are going to be getting slaughtered. They're not going to jump back in. So that's that one. Now let's take a look at some of the other ones, because they all got hit, and this is why I've been warning about it. Yes, I got out early, but I'm saying do not chase here. We'll be able to pick them up at lower levels, and this I believe we'll be able to get anywhere between the, let's just say 36 and all the way down to the 28. So everybody that's here, now we broke it, because it's been pretty common. You just buy the 50-day moving average on the hourly chart. Now it's breaking, and we're probably going to see a move coming somewhere down into this area here. But we're probably going to get a pop back up again to make everybody believe that this is, this is just a one-off, and they're going to be piling back in saying, all right, I'm glad I bought this. But it's going to end up coming back down here. Everything retraces. So anybody that's out there, Ryan, that believes that it's not going to happen, you have to be in the market a little bit longer to understand that everything retraces. It doesn't make a difference what stock it is, what market it is. Nothing goes straight up or straight down. So this is it. This was down 14%. Now let's take a look. There's actually IREN, 9%. So these were all your high flyers, and you can see everybody bailing out of them so fast. And here we have QBTS down 9%. So this is why I said, hey, I missed this part of the move with the full position. I've been saying to take money off the table, even every step up. I said you pull it out. This one you'll probably be able to get at 27 down to the 23. So when it comes there, that's when we want to be buying, and that's when we'll probably see, like I said, the VIX at pretty high levels. So this is my downside target. Whether we have to come back up, I don't know. This is, you play popcorn up here, but it's a topping process, and that's pretty much what I've been saying. Now, the thing is this, is that we're here, you can see, this is another little kind of clue, is that there was no bearish divergence on this move right here. I mean bullish divergence. You can see that was the low. So if we take this out, we're probably going to stop somewhere. I would say the first stop is, because we're not going to go straight down to that target. We're going to go up, we're going to go down, up, down, and it's going to form like an ABC moves. So these were kind of, you can see, impulsive, where you have your 1, 2, here's your 3, 4, 5. And that's how, as far as the wave structure, where you have these divergences on each one. This one was really the biggest one, where you can see our momentum was actually red when we were making the higher high, and it came back down. So momentum never ever got back up there, even with this bounce right here. So this is going to be the critical line. Once this is taken out, we're going to get a quick drop down to the 64.77 and probably down to the 6400 or somewhere 63.50. But then we're going to bounce back up, and we're probably going to test these moving average that are going to be rolling over, and from there come back down. And this is going to be something that takes place for, like I said, it's going to be 3 to 4 to 6 weeks on it, and people have not been used to that since the low in April, when everybody was throwing in the towel on stocks. So they're going to think it's a bear market. It's not a bear market. It's a normal pullback. It's just going to take, it has to eat up time. That's probably the best way to put it. We've had no time. These have been 1 day, 2 day drops, and that's not enough for moving even let's just say our momentum indicators. The daily went down, but look at the weekly is just coming up, and we do have divergences there. So my take is this, is that right now, I think if we come down, if we break it, I do believe that we're going to find support, and it's probably going to be somewhere in this area here. It's going to be a false breakdown, and then we pop back up somewhere into the 6,600, maybe up to the moving average. But right now, this looks like we're forming some type of triangle, and you can see this here, where if I just kind of draw this line here and draw this line here. So if this breaks, then we're going to be coming down. But my guess is we come back up and test test the top of it. And that's one word, we're getting pretty oversold there. But we also could be doing this, and I have these mapped out on it, where we're making an ABC move, and you can see this comes down to the 65.12. So we have a couple options here, because again, we don't even have any bullish divergences on this move down right here. So if this is just an ABC move, then we're looking at a move coming somewhere down to the 65.10 area, and if that holds, then from there, now we're going to have some bullish divergences, and from there we bounce back up and probably test this. This is really thick red line, because that's the really heavy resistance. And from there, you can see they popped up, went out, popped up, came down. So this is where buyers will be, and this could be a false breakdown, because if you look, this is the support. This is going to be the panic line if it breaks. But if it breaks, now it comes down to this support level, and it's just an ABC move, and now it shoots back up again, because like I said, tops are around it. So once we make that move and we pop back up, we're probably just going to come up to this area here. All those high-flying quantum stocks are probably going to go up another 20% from their lows, and everybody will start chasing them, and from there, that's when they'll pull the rug out. So it's a top is a process. So like I said, even if we come down here, we're probably going to pop back up and come somewhere around here, but we're coming into the time period when the cycle's looking for a top, and everything is actually looking for it. If it's not, so be it. It's not a big deal to me. We'll just go back to trading the long side. But when we have all the warning signs with the NIAD divergence, with the VIX that was been pinned to the lows, and it spiked, I think, 20% today. The put-call ratio, there's time in this that needs to be worked out, and that's why I'm looking for this 3 to 6 week correction that's going to take anywhere from 10 to 15% off the top here, and from there it'll probably be a great buying opportunity. So That's it. We either we come down here, or what happens is I have another thing here. So this is, okay, so this is what I was talking, another one that I was talking about is you can see this channel right here. And again, this looks like it's just, it's a bullish channel. And if you look at this, we have an A, B, C move, and this is exactly where the low was. So what we can be looking at again with the topping process, there's nothing that's what's the word I'm actually impulsive. Everything is overlapping everything, and that's part of the process here. So we could pop up here and stop somewhere around that 60, pretty close to the 6,700. And then from there, get rejected and come back down again. And it's just going to cause people havoc. And why I've been saying you have to look both ways on this. This is going to be a trading market. And anybody that's out there thinking that we're only going to head higher, they're going to get slaughtered. And a lot of them probably did today, especially if they were jumping into the quantum stocks yesterday. And that's, that's the way it is. So if we head higher tomorrow, I'd be looking for a target somewhere up at the 6,700. If we head lower, I would think they may try to stop this here at the 65.55. But the thing is that if they take that out, now we're looking at that downside target of 65.25, 65.10, and that may be where we get this massive gap down. And I would not be shorting if we get here. I'd actually be looking to go on the long side for the retracement back up before we head back down again, because it's not going to go straight down. It's going to be chopping back and forth, and then we're going to get that big leg down. So we don't have bullish divergences on the 15-minute chart. So again, that's suggesting that these lows are not in. So if we come down, this support holds, then we could come up, and what may be happening is we may be forming some type of descending triangle where if we just start taking this here, and say we can A, B, C, D, and then this would be E down. So this is, this is the type of pattern I'm looking at. If we do head down to this support and it holds, a bounce back up and then down. But if we come down first, this is where I'd be looking at the next, where the support will be. And then we bounce back up, and we may be making some other type of pattern. But here's the, that head and shoulders pattern that I've been showing you, and I pointed this out when we were here, that we could be making a head and shoulders pattern that would be pretty solid on it. And if that's the case, we're looking at a target somewhere down at the 64. So it's not that big. It's only from 67 to 65 down to about 200 points. So that would bring us down to the 63, somewhere right here at this support right here. But again, I don't know if it's going to play out. But all I know is that there's no bullish divergences. So for me, this is saying these aren't the lows. But we could pop up first because like I said, I don't think the bulls are going to go down easy. But if they give a big gap down, I'd be a buyer down here. And if they gap up, then I'd be looking to sell up here, because if they have to come up and test these highs or even get to 6,800. I don't have a problem with that. I'll take whatever quantum shares I have left. I'll sell those and wait for the market to come back down again, because there's too much. Let's say there was too much euphoria. Now you can kind of feel a little bit of the fear that's in there, that this market isn't just going up to new all-time highs. So anyway, that's those patterns. We either head up and test here, and we're forming that a little descending triangle. If we gap down, I'd be looking at a move coming all the way down to the 65.10. And then on the upside, on this is that channel. So if they're following this channel and this ABC move is complete, then we're looking at a move coming somewhere probably up into that 6,700. So that's that part. And then just on the 2-minute chart, I'm just showing you some resistance zones. So this is the first part. The bulls need to get above 63.37. We have the 66.42. This is really, the 66.65 is heavy resistance, and this is also the 62% retracement level. So if they get above that, then we're looking at a move coming up to test or come somewhere up into this area, 66.84. But this is the major resistance area where I believe sellers will be waiting, and I'll just show you another pattern that I'm just seeing right now. It would be a inverted head and shoulders, which is, you can, hang on one second, there's your left shoulder, duplicate. Here's your head and duplicate. Oh, oval. Sorry. Let me do this. Duplicate. And so say we do come up to the 66, 65 and then come back down again, this would be the right shoulder. So here's your left shoulder. This would be your the neckline, and this would be your the right shoulder. And what would happen is it'd probably come up, and I don't believe it's breaking out on it, but I think a lot of people will see this pattern after it plays out and believe it is and jump long. The market's just going to play tricks on people. That's probably the best way to put it. So ABC move on this one, it bring us right up into this 66.42. Like I said, this is the important resistance, 66.65, and then the 66.84. Downside support is what I showed you before. The first is going to be the 65.53. And then if they're really going to play games, they're going to gap it down to the 65.10. So stay open-minded. I've been saying this from a very long time that this market's going to make everybody go nuts before it actually heads down, and I think it's starting to do that. So with that, have a great night, and I'll talk to you guys in the morning.